Hello everyone, this is Tejashwini. In today's class, let's continue our revision of the capital gains, that is capital gain part 3. Okay, so we have already uploaded two parts of capital gain revision. You can go and watch that video first and then you can come back to this video. Okay, now, so if I'm speaking about the next section, that is advance money which has been forfeited. First of all, whatever the advance that you're going to receive from the uh, buyer, what will happen is that if I am the person who is buying it, I'm not going to buy that property just by looking into it. Today I'll go and see, tomorrow I'll buy. No, it will not happen like that. I'll go and see the property. I'll go check 10 different properties. Out of those 10 different, which is very comfortable for me as per the location, as per the space or square feet, whatever it is comfortable, I'll decide one place. That place I'm going to give advance. That is, if the property price is 1 crore, I'm going to give them advance of, let's consider I've given an advance of 2 lakh rupees. Okay. And this advance which is being received, and if the property is being sold, then everything would be fine. This 2 lakh becomes part of the consideration and that would be closed. Every 2 lakh is advance, 98 lakh they are going to give at the time of settlement and they are going to close it based on the agreement. What happens in the case where the agreement advance has been given, but the property is not been sold? Property is not sold. In that case, whatever the advance which is being received, that will be forfeited. Forfeited means cancelled. You will not give that money back to the buyer. Everyone. So this forfeited money, if it happens, then what is the tax liability and then what is the tax exemption? Then what is the tax application that you would get is what we are going to see in section 51. Okay. If the advance was received and forfeited before 1/4/2014. If the advance is forfeited, this 2 lakh rupees, whatever advance I'm stating, if it is forfeited means before this date, it is going to be subtracted or it is going to be adjusted with your cost of acquisition. Okay. So let us take a simple example. Let's consider the cost of acquisition of this property is 30 lakh. That is your purchase in 7/8 only. And this forfeiture has happened on 1/4/2012. Can I say this is before for advance received and forfeited before 1/4/2014? So now what I would do is very simple. This 30 lakh rupees, whatever I'm going to record, out of this 30 lakh, 2 lakh rupees I'm going to subtract and I'm going to create 28 lakh as my cost of acquisition. My cost of acquisition will be reduced to that extent of the advance forfeited. Think, okay, 2 lakh rupees, whatever you are receiving, that's your income, no? 30 lakh rupees you are paid out of your pocket, that is your cost. Whenever you are giving the net effect, it has to be the net effect, that is plus minus, you are going to get 28 lakh. If the advance was received and forfeited, suppose, if the advance was received and forfeited on or after 1/4/2024, then whatever the advance that is forfeited, whatever the advance after on or after this exact date 1/4/2014, it will be considered as income from other sources. You're going to add this to what? Income from other sources in the year in which you're actually received. Everyone, in the year in which you actually receive, you are going to consider it as your income from other sources and clear. Now, what is meant by exemption? Exemption means from the capital gain. Suppose your total consideration is 1 crore. Cost of acquisition, indexed cost of acquisition. Let's take an example. Indexed cost of acquisition in my example is 60 lakh. You have remaining 40 lakh. No? This 40 lakh will be long-term capital gain in my example. Whether this long-term capital gain will be taxable or not will be the question. Long-term capital gain will be taxable or not. That is 40 lakh will be taxable or not will be the depending on the exemption. Exemption means if you invest in the places, if where the department, income tax department or the government wants you to invest, which is coming under section 54 series, then if every conditions is satisfied, then 40 lakh will be the exemption that you would get. You would pay zero tax on the long-term capital gain. That is long-term capital gain will be made zero. If that is the case, then it will be considered as nil. Clear? Now, Exemptions from the capital gain. It starts from section 54. Section 54, 54B, 54D, 54EC and 54F. What is very important is going to be section 54, 54EC and 54F over here. Okay. The eligible assessee, please try to understand, the eligible assessee is the individual or the HF. This individual or HF, if this fellow is purchasing the residential house which is a long-term capital asset, and this long-term capital asset, the asset which is transferring, the long-term capital gain is getting out of this asset transferred. No, this is going to be residential house, that is long-term capital asset. This asset which is being transferred, the residential house which is transferred, this exemption you will get for the long-term capital gain only and only if he purchases. Qualifying asset shall be where you are going to put your money in, where you are going to put your investment in. Okay. One residential house which is situated in India or two residential house he can buy. What is section 54? Recall, that is individual, it is applicable for individual and assessee. If individual and HF, these people can opt in for section 54. Okay. Now what happens? This section I can apply only if it is a long-term capital asset. By selling that long-term capital asset, I should buy another one residential house only. But two residential house can be bought at the option of assessee if the capital gain, if this amount of capital gain, whatever we have considered, if it doesn't exceed 2 crore. If it exceeds 2 crore, he can get exemption for only one capital asset, one residential house. If he is having the capital gain exemption less than 2 crore, then he can buy two residential house. For both the two residential house, he will get the exemption. Clear? Now, the time limit shall be, it has to be purchased within 1 year before or 2 years from the 2 years after the date of transfer. If you are purchasing, it has to be purchased within 1 year date of transfer, purchase within 1 year before or 2 years after, or within 2 years. Today is the date of transfer. 1 year before that I should have purchased. 2 years after the date of transfer, within that period I should purchase. If it is construction, then construction within 3 years after the date of transfer. Construction within 3 years after the date of transfer. This would be fine. Clear? Next, the amount of exemption would be the cost of new residential house. Whatever the house which he has purchased, whatever the money which he has put in the new residential house, 1 or 2 depending on the situation, that will be available as your exemption. But remember that exemption maximum you can claim for the exemption is 10 crore rupees. The maximum you can claim is how much? And this is your section 54. Section 54B speaks about individual or HF. That is, this is available for individual on HF. The asset which is transferred is urban agricultural land. And this urban agricultural land, whatever you're transferring, the property which you should buy is going to be the land which is used for agricultural purpose. It can be either rural or urban. You should have purchased within 2 years from the date of transfer. Only this point is applicable. You should have purchased only 2 years from the date of transfer. And the cost of whatever the new agricultural land is that is going to be the exemption. Section 54D speaks about it is applicable, or this section exemption can be used by any assessee, not individual and HF only. It can be used by anyone. The property which you need to transfer is the land and building which you have taken for the industrial undertaking. The other property which you are purchasing should also be the land and building. And the purchase or the construction should have been done within 3 months from the, within 3 years from the date of transfer. And whatever the exemptions that you are going to get is whatever the new asset which you have purchased or the capital gain, whichever is lower. Obvious, no? If the new asset purchased is 5 crore, suppose, and the capital gain is 4 crores, you are going to get exemption only to that extent of capital gains, not anything more than that. Making sense? Next. Section 54 EC. In the case of section 54 EC, it is going to be eligible assessee, any assessee for that matter who is an eligible assessee. The asset which is transferred is going to be the land building or both. The asset which you should have transferred should be land, building, or anything which should be a long term only. Short term is not considered here. It has to be your long term only. Clear? Now, whatever the asset which you have transferred, the what asset you should have purchased should be bonds of NHI, that is National Highway Authority of India, or Rural Electrification Corporations Limited. This RECL or NHI bonds or any other bonds which is notified by the central government, which is redeemable after 5 years, you should have purchased. And you should have purchased within a period of 6 months from the date of transfer. This point is going to be very, very important here. You should have purchased NHI bonds or RECL bonds or any other bonds notified by the government. Redeemable period should be after 5 years. You should have purchased within 6 months from the date of transfer. Okay. Now, the amount of exemption that you're going to get is going to be the capital gain amount or any, that is capital gain amount or the specified bonds, whichever is lower. But the maximum exemption you can claim under section 54 EC is 50 lakh rupees, not more than that. This is the restrictions that you have. You can take a maximum exemption of 50. The next section, that is section 54F, speaks about individual or HF. That is, I, being an individual or HF, can take this section 54. Any long-term capital asset other than the residential house. If I'm transferring any long-term capital asset, it should not be a residential house. Here, 54 speaks about residential house. This is other than residential house. If you're buying anything other than residential house, sorry, if you're selling anything other than residential house, this is the asset transfer. And the asset which you have bought is one residential house which is situated in India. It has to be in India, and that has to be residential house only which you are purchasing to get exemption under section 54F. Okay, purchase should be done within 1 year before or 2 years after the date of transfer, and the construction should be done within 3 years after the date of transfer. The amount of exemption shall be the cost of new residential house, whatever the residential house which you have purchased. If it is greater than the net sale consideration, then entire capital gain exempted. What does it mean? Simple. Suppose the cost of new residential house is 5 crores only. In this example only we'll take. Okay. The cost of new residential house is 5 crores, and the net sale consideration, that is, remember, in the case of section 54, you're not just investing the capital gain, you're investing the net sale consideration. That is, in my example, if you could see here. This 1 crore was your net sale consideration, no, in my example. This 40 lakh rupees was my capital gain. Let's take the same example, okay? If this entire 1 crore is been invested, then you will get the entire capital gain exemption. Suppose you have invested in the new property only 72 lakh, okay? You have invested net sale consideration of 72 lakh. If this is the case, you're going to get a proportionate capital gain as your exemption. How do you calculate? Very simple. See, if 40 lakh rupees is the capital gain for 1 crore of net sale consideration, how much is the capital gain? That would be proportionate in this case. Please take the calculator and do, people. It's a cross multiplication here. Cross multiplication, please do it. If 40 lakh is the capital gain for 1 crore of your total consideration, how much is for 72 lakh? Please do the cross multiplication. You are going to get 28.8 lakh. That is, this is going to be your capital gain exemption which you will get. You will not get 40 lakh entirely. You will get 28.8 lakh. Clear? Suppose you have invested in your new residential house which is of worth 1.2 crores, which is more than equal to or more than your net sale consideration. You are going to get the entire 40 lakh as your exemption. Simple. This is going to be a revision class, people. So not in-depth explanation with regarding to how it goes on. That will be done in the normal classes. Okay. Now, so section 111A speaks about the tax on the short-term capital gain in respect of the equity shares or of an equity-oriented unit. People, more about this 111A, 112A. 112A specifically is already been done in the previous video. You can watch over there. We'll speak about the basic points of 111A over here. The tax on the short-term capital gain, remember, this on this equity shares or equity-oriented shares, the tax rate which is applicable is going to be 15%. percent. Short-term capital gain of 15% is applicable. In case of tax on the long-term capital gain, 20% is going to be applicable. 112 is the basic section of the long-term capital gain, wherein the tax rate shall be 20%. Clear? Now, tax on the long-term capital gain on the certain assets is going to be the tax on the long-term, that is long-term capital gain on certain assets, 112A. More about this we have covered in the uh, other video, revision 1 and 2. You can go and watch over there. Section 112 speaks about you getting capital gain on equity oriented shares, that is equity shares, units of business trust and units of equity oriented funds. And what is the tax rate that is applicable shall be, the tax rate shall be 10% in excess of 1 lakh rupees. Whatever the capital gain that you would get, it is going to be excess of that 1 lakh rupees, 10% you are going to get. Clear? So this is about your capital gain. Thank you.